Hello again. You're joining us on this edition of India Tonight as we break down the economic survey 2024-25 and the pointers that are coming through. And to do that, Sajid Chinoy is joining us, the India chief economist at JP Morgan. Good of you to join us this evening, Sajid. A very good evening to you. For one, we're looking at the economic survey and we're seeing that forecast 6.3 to 6.8% growth for FY26. And those seem like pretty solid numbers. But now, considering that the report is also pointing at easing in food inflation, that is this happening of late, do you think there is a chance that we could see an upside surprise to the GDP growth estimates being made here?
I think the survey's growth estimate and growth range is very realistic and very credible. I think we have to appreciate that we're living amidst unprecedented global uncertainty, and that could have an impact, on the external outlook and therefore on exports growth. So I think it's prudent to live with the range. The fact is fiscal policy is consolidating. There will be space for some monetary easing, we expect. But I think, a number close to 6.5 seems credible for next year.
So credible and achievable, Sajid. But given the backdrop of slower growth, the kind of pressures on the inflation front, how do you assess the government's efforts to balance fiscal discipline on one side and the need for economic support? Is fiscal consolidation, you think, still on track, or you see some cracks emerging?
I think the government's been very good on fiscal marksmanship in recent years. They've been under-promising and over-delivering. Revenue assumptions have been very conservative, and so they have mentioned that in FY26, they'd like to see the central fiscal deficit, at 4.5% or below. And so we do expect that that's where the deficit is going to be. And I think that's, there's a balance here because in the medium term, we need to have lower deficits to ensure that debt is sustainable and we're making space for the next shock. At the same time, given the role, the counter-cyclical role that fiscal policy has to play, I think it's important to calibrate that fiscal consolidation. So I think getting the balance right will be important.
Talking about the balance, Sajid, between the fiscal and monetary policies, the RBI, of course, recently announced measures to boost liquidity in local money and forex markets. And given some easing that we are seeing in food prices recently, is there a scope, you think, for a cut in benchmark interest rates by the RBI that could happen in February?
I think the good news is that food inflation is now gapping down quite sharply. You've seen a decline in vegetable prices and other food prices as well. We're expecting Jan to March CPI to be about 4.5%. So the RBI will have the visibility, hopefully, of inflation back in the 4 handle. And I think that does open up room for monetary easing. It opens up many more degrees of freedom for the RBI. We've seen that they've already begun to inject liquidity in the last few weeks. So I think that's cleaning the pipe, so to speak, before monetary easing. So the good news is we are going to see lower inflation in the coming months. That increases degrees of freedom for policymakers.
So that should be an important cue for policymakers, both on the monetary side and the fiscal side. But talking about the economic survey, Sajid, it has been giving a lot of emphasis on boosting manufacturing and capital expenditure. And now with the government's push to make India this global manufacturing hub, there is the promise of increased infra spending as well. How do you see these sectors shaping up in the next fiscal when you talk about infra and manufacturing?
The leitmotif of the last few budgets has been a big capex thrust. We've gone from 1.7% of GDP for the center to almost double of that. 3.2% of GDP. This year's target is 3.4. Let's see how close we get to that. But there's been a significant ramp up in capex. But I think it'll be important not to let one's guard down. We've seen state capex soften a little bit in recent months as state expenditure priorities are changing. So I think it will be important to ensure at least that capex is going in line with nominal GDP. So the share of capex doesn't fall next year. And I fully expect that that's what authorities will likely target.
So there is still that heavy lifting that we're expecting on the government side when it comes to capex. But Sajid, we've been hearing a lot about the pressure on consumption, especially in rural areas in recent times. Demand has been sluggish despite some government efforts to support incomes. But do you think now that rural demand is going to pick up further in the coming quarters where we're seeing some green shoots?
Yeah, on rural demand, I think the hope is that once inflation comes off a little bit, that will help with purchasing power in the rural economy. We've also had two strong harvests, one strong harvest, Kharif, Rabi sowing is going well. So to the extent that agricultural production is strong in the second half of this year, and you're getting some relief from inflation, hopefully rural demand will pick up. That said, so far it's been tentative. And so it's important that that process continue. We're seeing some slowing in urban consumption, some of which is understandable because the excess savings from the pandemic have been depleted. But it's therefore important, I think, for rural demand to pick up the slack, in the coming quarters.
But going ahead, now we've seen this growing trend as well, Sajid. States are rolling out subsidy-linked programs, especially when it comes to areas like food and fuel. And this to cushion the impact on households. But do you think we'll see a more robust approach to managing these subsidies at the central level in the budget? How do you see the budget balancing this need for support with what we're talking about, fiscal prudence?
I don't believe so. I think, we've seen subsidies come off in recent years. I think the government takes its fiscal marksmanship very seriously. So I don't see a case why subsidies would go up at the central level. The key is going to be for the deficit more generally. Are we consolidating by reducing expenditures or boosting revenues? And hopefully, it will be revenue augmentation that will drive the fiscal consolidation this year and in the coming years.
Well, you sound pretty optimistic about times ahead. And of course, we'll be hoping that that optimism gets reflecting in the union budget as it's presented tomorrow. Sajid Chinoy, thank you very much for joining us with your perspective on the economic survey that has come out just ahead of it.
If you like this video, then like, share and subscribe to ET Now.